Hey everybody, it's Gerald here. In this video, we're going to touch onto PayPal stock here, otherwise known as PayPal for a lot of investors for the past couple of years here. This company has earnings on Tuesday morning. I'm going to go over whether I think the stock right now is a buy leading up into earnings, what this company needs to do to prove to investors that they are worthy of a higher stock price and potential multiple expansion here. So PayPal, as of this recording, is sitting roughly around $70. I think it's up about 1.5% this Sunday evening here. Leading up into its earnings, do I think the stock is a buy here? So to analyze PayPal, I like to do a SWOT analysis, really understanding what's good, what's bad, what are the opportunities with this company in terms of its growth levers, as well as the threats of this company here. So of course, the strength of PayPal is its valuation, right? This company is trading at a measly 14 times forward earnings and 2.25x sales, so significantly below its 5-year averages, as well as significantly trading below just the S&P 500. Most stocks in the S&P 500 right now are trading at multiples of 25 plus, right? Stock is trading essentially half of that, right? This company is with unmatched global reach. They operate in 200 plus markets with 450 million active accounts. This 450 active accounts are loyal customers, and with the different growth levers, which I'll talk about with its ads business, is a huge point of why a lot of investors think this company has a lot of growth, potential multiple expansion coming up ahead. This company has multi-channel growth drivers as well, with Venmo as well, with 9.6% total payment volume growth, buy now, pay later with 33 billion total payment volume in 2024, as well as enterprise solutions expansions. This company right now is focused a lot on profitability focused execution. With the new management post Dan Schulman with Alex Chris here, he's focusing on profitable growth, less on the top line in terms of its revenue since his first year being with PayPal, more on really the bottom line and really improving proper profitability focused execution for this company here. This company also has expanding merchant ecosystem. They have partnerships with NBC, Roku, StockX to enhance that fast lane adoption, which is actually driving up a lot of conversions for these companies, as much as 100 plus basis points, which I'll cover up in a couple moments here. In terms of the weaknesses for this company here, this company or this whole payment sector has a lot of competition with the likes of Sezzle, a lot of other buy now, pay later options such as Klarna and so forth, right? So a lot of competition, a lot of startups that are pretty much impeding into this payment sector here and essentially eating at PayPal's market share. This company is also with revenue growth constraints, right? The company's deliberate shift towards profitability rather than just revenue expansion has left revenue to essentially stagnate, right? I think the top line growth of its prior quarter year over year was roughly around 5% growth, right? So nothing too substantial. If this company is able to really grow that revenue, a lot of investors, retail investors especially, will flood into this company here and really cause a re-rating in the company here. Once again, in terms of its threats, there's a lot of expansion by Apple Pay, Zelle most recently expanding internationally, as well as Cash App and digital wallets and peer-to-peer payments. My counter argument to a lot of this intensifying competition, looking at it in terms of its revenue and the inflection in terms of its margins, a lot of the competition sort of argument with this company seems to be overblown, right? Especially with a lot of the growth levers of this company here. Looking at the opportunities of this company, which there are a lot of different stuff leading up into this earnings call with a lot of different strategic initiatives, strategies, partnerships that they recently had with Google as well. But we'll first touch onto PayPal's everywhere in the fast lane, right? They reduced checkout latency by 40% and boosted conversion rates, like I said, by 100 plus basis points, right? So with these partnerships with NBC, Roku, StockX, Google, they are a leader in this omni-channel commerce sector here. They have buy now, pay later growth that is re-accelerating, right? Buy now, pay later services drove a $33 billion in total payment volume, which is a 21% year-over-year growth, which is a dominant key growth lever for this company here. And the big thing for this company that they're really tackling on is with the agentic commerce, right? They're advancing strategically with agentic commerce with this partnership with Google, and that should yield a lot of results for this company here. And the biggest thing and the reason why I really like PayPal stock is the ads business. The ads business is a very high margin business, and if this company can execute with under the leadership of Mark Reether, former Uber ads leadership, this company has a huge runway and a huge way for this company to have a re-rating in its multiple. Looking at the company already though, the intrinsic value is sitting roughly around $92.64, currently sitting at roughly 70, right? So it's offering a margin of safety of over 30%, nearly 32.78% undervaluation in the stock under a discounted cash flow model here. Hedge funds and institutions, a little bit mixed bag here, but we have a lot of big names, which I'll touch on in a few moments. Overall, in quarter 2 2025, we have 53% of these super investors, hedge fund managers being bullish and 47% bearish here. Looking at some notable ones, we have Harry Sigalis, did decrease slightly by 16.9%. He's down 8% in his position, so that's good. I get to own this stock cheaper than Harry with $80 million in value and composing of 6.54% of his portfolio here. We also have Coatue Management increased by 33%. He is down 17%, nearly $1 billion or $500 million into this company, composing of over 1% of his portfolio. We have Ray Dalio, $200 million in his position. We have Israel Englander, although he did decrease his position by 64%, has $80 million in his position. Ken Griffin, of course, 42%, $93 million. So we have big super investors who are buying this company here. Looking at Wall Street, they are not so bullish on this company as a lot of super investors are looking at a lot of the ex-investors as well. Average price target for this company is sitting roughly around $74 with a 5% upside. It is limited on its downside due to its buyback program, creating sort of a floor for this company as a low price target about $65. Only about a 6.84% downside for this company here. Looking at the company's fundamentals, this company's revenue year-over-year growth for the most recent quarter was 5.11%, right? 5.11% with a valuation of 14.5. This company typically trades at a PE of 26.41. If it even reach back into the 18s or 20 or meet back into the S&P 500 of 26, this company has a huge runway for growth in terms of its stock appreciation. This company is wildly free cash flow positive year over year. This company is producing nearly $5.3 billion in free cash flow, as well as a 7.81% free cash flow yield. We have an excellent profitability metrics, return on assets of 5.79%, return on equity of 23%, return on capital employed of 17%. The main thing for this company is its margin though. Its net margin is sitting roughly at 14.49%. A lot of investors are worried about the margins, especially if this company can have an inflection in terms of its margin. That can erase the argument of a lot of the fierce competition in the fintech space eroding into PayPal's market share here. So like I said, with the expansion with buy now, pay later, Venmo monetization, the ads business, a high margin business, this company has a huge runway for growth here. Looking at the shares outstanding, this company is cannibalizing their share count. They're eating up their shares. This company was once with 1.17 billion shares, currently now at 973 million, as you can see in this graph here. A huge share buyback program. If this company can continually buy back its shares during these lower valuations, it's going to yield pretty positive results if this company is able to increase both its bottom and its top line here. Once again, I really like free cash flow positive companies because it allows companies to invest into partnerships, strategic initiatives or strategies that can really grow the company, as well as potentially offer a dividend, which I don't think PayPal needs to institute right now. I would much rather them at these valuations to essentially do what they're doing in terms of aggressively buying back their share count, right? Simple supply and demand. You reduce that share count and ultimately that price is going to set a floor and continually make higher highs and higher lows here. Looking at the technicals for PayPal stock, I first want to visit the weekly technicals over here, going from a bottom to a high here. Looks like the stock, actually let's get rid of it, going from a bottom to a high, going from as low as 56 to a high of about $80. The stock recently found support around the golden retracement for a potential move, third wave move upwards, right? Looking at the Fibonacci extension for this company here. So we have a potential price third wave extension to 1.618 to around $103 here, which is a lot of people are expecting in terms of the intrinsic value, sitting roughly around $90 to even $100 here. At this point, pretty much aligns with prior supply from August 2022. And that is a potential move for this company here from essentially a wave 2 pullback and a longer third wave extension up into the 1.618. And this is all with recent or potential catalyst of its most recent earnings. If this company is able to prove to investors, it's able to even grow their top and bottom line, as well as offering a lot of news onto its ads business, which I really am excited for. The moving average are all still pointing downwards, so it is still in a downtrend here. But you can see here, we are potentially forming a golden cross here. If this moving average is able to inflect to the upside, we have a fundamentals, technicals all aligning for a third wave move towards that $100 price target here. Looking at PayPal on the daily time frame here, let's get rid of this moving average here. We just got over the 50 moving averages. We found some rejection around the 200 moving average. If this company is able to close above the 71.69, it'll leave room for growth up into the 75 to 77 price target, as well as leading up to the gap fill around the $80 price target. Once again, looking at some price targets on the weekly time frame, if this company is able to overcome this, it's essentially blue skies to the $90 price targets here. So that is my analysis on PayPal stock. Hopefully that's able to shine some light and give you guys a little bit more insight leading up into PayPal's earnings. If you guys like this video, please like, comment, and subscribe. It really pushes me forward. And as always, happy trading, guys. Trade safely. I'm rooting for you guys. Take care.